The super committee fails. Ratings agency Fitch is now reviewing the U.S.'s AAA credit rating. Spain is forced to pay double what it did in October to borrow money, and Hewlett-Packard gives a disappointing outlook. U.S. stocks are trying to recover after a brutal one-day sell-off. I'm Alix Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alix Steele with The Street, and together we bring you the morning call. Scott, stocks is getting hammered on Monday, S&P down almost 2%. How much damage was done over the last almost week now in stocks?
I think there was a lot of damage done as the wedge resolved to the downside starting last Wednesday. At that point, there was still some hope that the market was constructive, that we could resolve to the upside, but we've been just getting headline after headline, and finally it gave way. And yesterday was a down day, but there was some significance. The market came a bit off the lows and gave a small hammer bottom and a point to trade against.
So does that mean that today are we looking at a relief rally that's not going to really last, or are we looking at some kind of strength building forward?
Well, today's rally or today and tomorrow's rallies, it will be judged and it will be important. But for now, you know, we have to look at levels, and I don't think you can expect much. If you take a quick look at the chart of the spiders, you will see that here's where the wedge resolved to the downside. Now, if you go back to the Fibonacci retracements that we've used so many times during the course of the past few months, you will see that again the market composure has changed. Okay, here we are. As of yesterday, we did hold the 50% retracement zone, which to some still signify that the rally is still on. I think we're not in rally mode, we're more in market prove yourself mode, but this was a spot to cover some shorts like we talked about yesterday, maybe get long. So yesterday I took a little bit long, and now I'm going to see how we respond to yesterday's candle.
So if we continue to kind of climb higher here, would you be adding to those longs, or you just really need to wait and see?
Well, I'm going to try and handle today as if I didn't take anything home long, because there are a lot of traders out there that didn't want the overnight risk. So if we're going to bounce today, they're going to have to get in and maneuver. So for me, I'm going to look to see how far into yesterday's gap we can go. So if we go back to the chart of the S&P, you will see that there will be a high in from yesterday where the gap starts. That starts at 120.35. If we get up to 130, I think we're right around there now at the open. Go a little sideways, and then in 30 minutes, take out that high. I'll probably add to my spider position, and I'll see if we can go back, and then since I have to figure out how we handle the 50-day at 120.92. So I think there's easy room from yesterday, above yesterday's high, to the 50-day, and then from there, the bulls are going to have to prove that they could actually reclaim it.
And then if we reverse, though, however, and then go below that 50% retracement rule, are all bets off? Would you be dumping your longs, or just? Yeah,
then I think anybody who's taking a stab at this level will have no commitment, and that's what I think one of the problems moving forward is that there's not going to be that much commitment to this rally moving into Christmas time.
Right, we were talking, usually you see that Santa Claus rally as fund managers put money to work at the end of the year, but what do they chase when nothing's doing well? I mean, what do you do when Apple's at, 360?
Well, that's why you have two camps. Okay, you have one camp that actually played the rally very well, and they're outperformed the benchmark. So they look great to all their clients. They also have a percentage in the bank that they're going to get a bonus out at the end of the year, so why mess with that? And then you have those that everyone talked about chasing the percentage gains,
right?
Or the what's the word?
But I don't know what you're going
for. Chasing the rally, but if you have no rally, you have nothing to chase. So they were let off the hook. So there's no pent-up energy. So that means a lack of interest. That means you have to be that much more just selective on what you trade moving forward and look for those compelling spots, because there might be a lot less to do in the next 4 to 5 weeks if based on what's going on right now.
Than we're used to. So let's look at some of the sectors that might provide some kind of opportunity. Let's go to retail first. It was down just about 1.5% yesterday. It was better than the S&P, right? I mean, did it hold key support?
Yeah, if you look at the RTH, as we get right to that chart, it's still holding above the 50-day moving average, and it also came off those lows. We drew this line yesterday that I said some macro trades will probably look at, and this is what held. So same thing here. Let's see how far into this gap it can go. Let's see if it could take back some of these moving averages, but you can have a lot of resistance right here. So I wouldn't expect much for a trade. If you did go long yesterday, see how much we fill and see how this 110.40 poses as resistance.
And what about oil? I mean, we had oil services close off their lows yesterday, and already today we're seeing WTI prices up already $1. Isn't that more bullish for this sector that has underlying support there?
Yeah, I think oil still above 95 is good for the sector. This group also came off the low, so it's like same story, different sector. This one is a bit stronger, so if you look at the OAHs, you will see that this didn't even reach the support level we talked about, so it showed up some pent-up demand. See if the OAHs could trade above this 120.23 to add to your longs, but I think it's going to have a really hard time getting above this 125 and taking back this area, which will be resistance.
Now, it does seem, though, that Brent prices are starting to fall and WTI prices are playing a little catch up there. Scott, at what oil price do you start to get worried in terms of other sectors like retail or input costs for other companies? Or do you kind of just ignore that and then just trade the OIHs?
It's definitely difficult to comprehend because when the market was almost at its highs, we were okay with 102 oil, okay? And now that we're at 96, 97, I don't think we're going to be relieved that that's going to be such a tax refund to investors that need to go to the pump. So I think for oil to really be an effect on the consumer psychologically and really for their pocket, it has to be a lot lower. And I think for it to psychologically damage the market, which we're already damaged, it's got to start getting back above 102 and make new highs, which we'll have to see if that could happen.
So we're not really there yet. Okay, let's go to the Qs because they struggled to go green this morning. Hewlett was kind of dragging on the NASDAQ, but now it kind of reversed. It got some more juice. Is this the strongest sector right now?
It's not the strongest sector, but it looks a lot like the other sectors where, it came off the lows. This morning I woke up, everything was up on the indices except for the NASDAQ, but then the NASDAQ played a little catch up. But this group is a little broken, and in a scenario where we're not in high growth, you see a little pressure. But it did come off. This was the line that we drew yesterday. Came off the lows. So if you did get long here, same situation. See if we can get above yesterday's high and how much of this gap do we fill. This is like the playground. This is the easy money. This is going to tell us a lot here.
It just seemed like, and we'll talk about this later in the program, is that yesterday some of the stocks that went green first were in tech.
Yes, so there are people still looking for bargains. They're looking for clean balance sheets. They're looking for scenarios that have a low PE, maybe a little dividend, and just things that are still looking good because, not everything goes low. We see in a down tape 70% of stocks are, go lower. So there are some gems that show their face, and that's what you look for in a down day like yesterday.
All right, I really want to quickly check in with the XLI and IYT to see how the industrials and the transports held up yesterday.
I think, yes, at the recap, I looked at the XLI. They look decent compared to the other groups.
Okay.
This held the 50-day. Okay, some things are through their 50-day. Same scenario here. See how they get into the gap and fill it. It's like the same story, different channel, or something like that each time. Everything a little off the lows. Let's see how much of this gap gets filled.
Can I just ask, I know I'm throwing this at you, can we look at the XLF though to see if that chart looks different or if that shows a lot more damage?
Goldman Sachs was one of the first to go green yesterday, so that was interesting for the banks. They've come down a long way, but when Goldman went green, I think a lot of people said, oh, maybe I'll take a little of the XLF overnight or some of the spiders. So if you look here at the XLF, you'll see that it's a lot further down. It's through all the moving averages, so it's showing relative weakness. No real level here. But again, it came off the lows. It has a bit of a gap to fill. Let's see if it could get to 1250 on the XLF. And if you take a quick look at Goldman Sachs, you'll see that it did go green yesterday. There was not many green candles that I just showed you. So a little bit of a higher low versus the low of the year. And see if maybe we can get a bounce up to 95, 96. It's not much, but that's, you have to take what you can get in this market right now.
Very true. And we will be back with other stocks that also went green tomorrow and how to trade them right after this.
Hi, I'm Sean Hendelman, CEO of T3Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, so some stocks that went green on yesterday. Let's start with tech. We were just talking about that. VMware was up over 1.5%, but closed just up about 1% off its highs. Seems like investors really took this stock up as a buy after NetApp's really disappointed. Was this like a trading vehicle, or do you think it's actually an investment here?
Well, VMW has been on our investment list for the macro traders. We've talked about having 7-8 positions if that's what you do on a yearly basis, and this one still is one of those candidates. So if you look here at the chart, you will see that this stock went green. It did actually a little bit of a red dog reversal where it went off the lows, traded through the previous day's low of like 93.66. So you had two trades. Once it went green, once it traded through the lows, and now it's got some room to about 97.50. I do see somewhat of an uptrend here that it did violate. So let's see if it could actually pop back up in it. But I wouldn't get too excited here. I think it's a trade, and I think if you're trading it, maybe you have room to about 97.50 if you're investing in it. Don't add, just sit in it.
Can I just throw another stock at you, EMC, because it owns a really big chunk of VMware. I wanted to see how that compares chart-wise.
Okay, so mega cap names have actually been showing some strength because they have liquidity and they also have somewhat of a dividend. I'm not sure what EMC has, but This is, I guess, in that camp. It came off the lows. It didn't go green, so it looks different. It did hold some support. If you look right here, this is where it broke out from. Okay, now this is where it held. I would say see if it fills the gap. It's got some room to 23 or so, but I think you're going to get some major resistance up here at 23.86. If you're an investor in this, just hold. If you're trading it, you know, you have a little bit more room.
All right, let's go to KLAC. Went positive for a moment yesterday as well, and does have a juicy dividend over 3.5%.
Yeah, well, the semis have been the strongest group. Intel's actually hanging around. There is a dividend here. It went green yesterday. Let's take a look at the chart pattern, because a lot of chart patterns are just broken. If you look here, you know, it didn't even make it down to the 50-day, so that's a good sign. That's showing relative strength. It did go green, and for a trade, if you took this home long yesterday, you probably have some room back to about 45-ish. If you're in it as far as an investor, just be a little careful, because it did from this area, it did break a bit of a momentum trend. So I think as long as it stays above this area, it looks okay as a trade. A little bit more juice. If you sold it up here and bought it back, you know, nice little trade for you.
And what about NVDA here? Rumors said that its graphics processing unit's going to be in Apple's MacBooks. No, not sourced yet, though, so we don't know if that's actually true, but caused a nice pop in that stock.
It did, and it went green first, and then once we rallied at the end of the day, it was up like 50, 60 cents. So whether the rumor is true or not, as of yesterday, it was a great trade for those that took it. If you look here at the chart now, let's take a quick peek. Let's take a little bit more of a macro peek here. It looks okay. You know what? It held support, nice engulfing bar, and I think this one actually has a chance to break out above this 15.40 if this is actually real news. So if you got in yesterday, I think you could add if the news gets confirmed above 15, and then you have room all the way up to about 18. So this is in the game. This should be on everyone's radar.
And EMC does not pay dividend, by the way.
Okay.
That information puts its cash to work in its businesses.
There you go.
Okay, let's switch sectors here for a second. Want to hit on gold. You know, Scott, we had gold see a 2.7% sell-off yesterday, but Newmont closed only down about 0.25%. Dividend protection, perhaps. So I wanted to see what the chart was looking like.
Okay, well, that's good news for those that own Newmont, and it was performing very well. So if you take a quick look at the chart, if you look here, if you were long this thing and you were a momentum trader, this is where you got out. Okay, just came back into some support, went green. Looks okay. Looks still in the game. It's above the moving averages. It's just taking time like everything else in this market. If it were to break, I guess, this little descending channel, which isn't that compelling, above yesterday's high of 65, 64, and you can get a move at least to retest this zone of 68. So if you're a micro trader, that's what I would look for, from about here to about 68. If you're a macro investor, just be in tier 1. I don't think you should be in anything more than just a tier 1.
And then rounding out the segment, want to hit on Visa, closed up about 0.5%. Maybe this is actually shaping up as a good way to play the holiday season. I mean, the National Retail Federation said that the average shopper plans to do 36% of its shopping online this year. That's compared to about 32% last year.
That's a big number. So let's take a look at the chart. So if you look at Visa here, you will see still hanging around. You know, these stocks at MasterCard, Visa, they're very, very sloppy, but every time you look at it, it's still holding better. It did break this mini uptrend right here at 94, so uncommitted money left quick. But this is where some macro money came in to support it, so I think it's still okay. Momentum traders probably won't even look at this again until it gets back to 96, so for those of you looking to play the middle and bought yesterday, I think 94 is some resistance, and then if we get back into a healthier market, which is going to take a lot of time, 96 is the breakout.
All right, let's get to some quick ways you can maybe make some cash today. Hewlett-Packard reported after the bell yesterday. The big story here was the disappointing outlook for Q4, as well as 2012 was down in pre-market. Would you be interested at all in trading this today?
I'll probably look at it just to see what it does. I think it wasn't it up yesterday and after hours?
No, it was down. I thought it was down in after hours, but it was up during the day.
There you go. So I think psychologically, we'll see what it does. I'm not going to trade it, but if it holds in there, it could be good for tech.
All right, let's go to Apple. Trading right around that 363 area. You know, it popped off of that area yesterday. Does that mean that there are substantial buyers here?
It just shows you that you could time a good trade. When Apple broke that box pattern at 393, a lot of patient traders said, I'm not going to start buying Apple until it gets near the 50-day. Yesterday it went down to, the 200-day, I'm sorry, down to 363. If you look at the chart of Apple, you will see what I'm talking about. And it somewhat held the 200-day. So now at this point, if you went long yesterday, same type of strategy. If it gets above 371.69, play it for a gap fill, and then see if there's any more. See if there's any power to 380. See if this means something. I don't think this is that compelling. First time at the 200-day, it always holds. Now you have to measure the bounce, and I think it's got room to about 380.
What about Amazon? Had a terrible day yesterday, down over 4%. I read an article here that Amazon could be heading for a Netflix drop kind of thing. Are we looking at that?
Well, momentum has left Amazon. Amazon reported numbers for the first time. The street didn't give it a pass. It didn't fill that gap. And this is one of the first high beta names that actually broke the 200-day and was like $10 lower yesterday. So if you look here at Amazon, you will see that it never filled the gap from earnings. It tried. There was a few good trades in here, and then it broke this triangle. This was your way out if you were trying for a bounce. And then it broke the low from earnings, so that was another sell signal. And now it came a little bit off the low. I think it's probably for only intraday professional traders now, but if it were to get above yesterday's high, you could get a gap fill, but then see what happens here. This is going to be a major resistance zone. So at this point, I do think it's somewhat broken. If you're a long-term Amazon guy and you've been in there for 5-10 years, just make sure you're hedged because things do change. You don't have to marry a stock, and technically it looks a lot weaker than stronger.
And rounding out this segment, want to go to Green Mountain Coffee really fast. A huge bounce yesterday. I saw like no news. I don't know. Is this just a trading vehicle right now?
Yeah, I think a lot of guys in the last week I've been hearing a lot about Green Mountain, and there's been some nice trades. So even though it's been crushed, it shows you that one man's trash is another man's treasure. And yesterday was one of those days. If you look here at GMCR, you will see that nice little pattern here. I think you can make some more money if this were to get above this little flag pattern right here. You're going to see another squeeze to fill this gap. So this important level here is about 55.18. If it gets above 55.18, you're going to see another squeeze. And I don't know why those guys didn't cover their shorts from 110 down to the 40 area. I think they're being a little bit piggy unless they really do have longer, big time horizons.
All right, fair enough. And then rounding it out here, I just want to get, Scott, your take on gold down almost 3% yesterday. But there were some supportive factors. I mean, yes, we broke below that 1680 support area, but there's been strong physical buying overnight, particularly in Asia. We saw the GLD shed, less than 2 tons yesterday, despite all the market pressure. Last week, ETP inflows were about 1.5 billion into gold. These are impressive physical numbers.
I think with gold, what's important is all of that, as well as know your time frame. If you're a long-term investor in gold, stay the course. There's a lot of problems out there, and you probably own it from a lot lower. If you're a trader in gold, which I've been trying to be recently, you're a bit frustrated. It's been hard to deal with. When it looks good, it breaks down. When it looks bad, it goes up. We had a few calculated trades in GLD lately. If you take a look here, this was one of them. And then you had a move, and it looked as if it was going to go to the upside. And then some guys actually got short as a result, like the market to the downside. So here, if you're a dip buyer, yesterday was a day to come in. But I think it's, again, in this range. It's very, very sloppy. Just stay light in gold because it's a lot of people can't figure it out right now, including me, and I've been able to figure it out for years. And very quickly, with the chart, does it look like its trend line's intact right now, or does it look like it's broken its trend line to the downside? Well, let's take a quick look. I'll go a little bit longer term. So if you go here, let me go like this, and let me go to the weekly chart of gold. As of right now, if you look at the longer term trend from here, still intact. Still intact. Okay. Still intact. Good to know. Short term, but look how close it is. It's been riding this trend for a while. It held. I'd say below this area, about 160 or so, and a close below there, then you could see the trend change a little bit. All right. Maybe trend change for gold. Wow, okay, that's on my beat, so I'll be busy. All right, thanks. I really appreciate it. So good luck trading, everybody. I'm Alix Steele from The Street. And I'm Scott Redler, Chief Strategic Officer at T3Live. Tune into the virtual trade floor. It was very helpful for those guys yesterday looking for relative strength. I think it could be helpful to see what is strong today and what can go into those gaps for cash flow.